All righty. All right. Welcome everybody. It's been a couple of weeks off, so little hiccup in the I don't know, back end of things that have to happen. But anyway, let's do it. All right. So learn to trade the open and close. Well, intraday traders need to trade, well, swing traders do both, of course, too, but more actively, day traders tend to focus more on the open. Uh, and so throughout the day, there are different items that we look at. Of course, it starts the night before, including your selections from the prior day, looking for new stuff, scanning, and what happened during the trading day that creates ideas for tomorrow. And so, gappers in the morning, usually that's where we start gaps, big volume surges, but primarily gappers. And then throughout the trading day, assessing how things go. And then at the end of the day, what showed relative strength and weakness. So essentially, we need to build a plan, like everything else, build a trading plan as to how we're going to implement our factory work from day to day. And so today is going to be about trading the open and close like a pro. Let's do it.
Good afternoon. So, Greg, always I think of something as you're doing the intro, and what I thought of today was people take your seminar full of information. Now I'm ready to try to implement this. And as you recall, we used to have these brick and mortar offices, and we had what's called labs. So we had 1 and 2 week labs. It's like, okay, you have this information. Now you're ready to trade the open, and you're awkward. You don't know what to do. So we it's like a bridge the gap. It's like you go to med school and then you go have your internship. So what we're going to be doing here for you today is kind of with a lot of time, an hour, is we're going to show you this internship, so to speak, of what we do every single day. We already have the knowledge. I can take my laptop anywhere in the world, and I know, regardless of what time of day it is, if it's pre-market, if I want to trade an hour before lunch over in France, or dinner rather, if I want to trade the close, that's what we're going to share with you today of how to implement your knowledge in a daily routine.
We have a lab every day. It's called the green room.
Well, that's absolutely true. Good point.
Yeah.
All right, so this is we start with this slide all the time because it's our technical approach. This is our method on one single page. Greg's course teaches you all this and the thought building lessons. So in this internship in the green room, every trade we're looking for is using this approach. But today we're focusing on not a particular setup, but this internship of trading the open and the close. But every slide of a technical chart that we look at, you will hear Greg and me talking about these concepts. Whether I'm trading a gap at the open, late day breakout, okay, what's the pattern? Where is it in the trend? Support and resistance, relative strength, weakness. What are the broader markets doing? Internals, psychology, and trade management. That is always there. These are 9 beautiful pictures of. We have more, but this is our beautiful pictures of every one of these are bullish setups on whatever instrument, whatever time frame. This is our starting point of analysis to add those other concepts. All right, so that's all just kind of background. Now let's focus on the routine part, what we're doing today. So what you have to decide. Do you want to be a morning trader? for an hour before you go to the golf course or go to work or whatever? Do you want to just trade the afternoon? Do you want to use the morning to put on your swing trades and then shut the computer down until the next day? Are you a full-time trader where you want to trade the open and the close? And, we're going to give you as much as we can today, kind of assuming that you're a full-time trader. And then you just apply the relevant parts to your own personal. So we actually start our market review the last hour of the preceding day. And what do I mean by that? Well, we end in the green room every single day with what our bias is, what's our watch list for the next day. And then we have overnight futures you could be watching. And now your alarm clock goes off. What are you going to do? What's your routine every day? This is mine. I wake up, I turn on CNBC, turn on my computer, check the futures, check gappers. I'm checking, I call it inventory for a purposeful reason. Your opens is your inventory. We aren't the manager at Nordstrom in the men's department exchanging inventory, exchanging clothing, which is his inventory. Our inventory is stocks, bonds, options, futures, cryptos. So our technical approach, what we're doing in this business is we're trading, but we're trading inventory using our approach to make money every day. That's what we're doing. I'm looking at my watch list that I had winnowed down from the night before. I'm saying if they still look good to go, setting alarms, watching news, economic events. So all of this is pre-markets. Okay. Hey, I haven't done a thing yet, except maybe this. This is our we have 3 different advisory letters with different focuses, and each one has their own tracking sheet of open and closed trades, has their own Telegram channel where we send new trades and trade adjustments all the time. So this is after I check the futures, this is the very next thing I do. I look at my open positions and I see if any of my alarms went off, if there's any big green bar, not green bar, a big positive unrealized gain, loss. Do I have any gifts or problems? And I like today in Weatherford we were in, WFRD, my alarm went off and we sold half pre-market at a $5 gain. So that's just to show you that. All right, Greg, so I've been doing a lot of talking. Any comments on what I've said so far about we're just getting ready for the market open? That's where I brought us. 9:30 now. Eastern.
That's what we're set to do.
Okay.
What you're showing there is the open trades, which everybody sees as a member in their member area, and they can see scrolling down. They can see all the closed trades as well. So everything's an open book.
Yeah.
And then from there, we start with the factory work. Well, we started with the factory work, but yeah.
This is actually one more slide on pre-market. And what I'm showing you here is the concept of relative strength, the concept of a possible tradable event in the morning, the possibility of, hey, this sector is acting really strong. So let me now explain what I mean by that. So these are both 15-minute charts of the NASDAQ 100 ETF over here. This is pre-market. And you can see it has a significant gap up. So just looking at that alone, I don't even know what the daily chart looks like. I don't know anything else, but this picture is telling me that's a nice bullish gap. So technology and the cues and probably the overall market is in a good mood this day. AMD. Wow, you can tell it's a small chart. Look at the price. AMD is like 160 now. So this gapped up. And so let's assume we have semiconductors in focus for the morning because of the bullish gap in the NASDAQ. I'm going to put AMD in a watch list to see how it reacts at the open because of this bullish pre-market chart. You'll notice right at 9:30 here, this thing's breaking out of a beautiful pre-market pattern as the cues are still falling in, retracing a little bit into the gap. So
Let me reinforce this pattern. Just we're price pattern traders. Wash, repeat, wash, repeat. And what strikes me as I look at this is must be an old chart, right? But if you went and looked at your hourly chart of, say, the Dow or different indices from last Friday was that explosive day, and you look at the 65-minute chart, it looks like this: blast off, pullback, rounding bottom. That's a bullish pattern, right? It blasted off. Everybody's thinking it's going to pull back. It doesn't pull back. It makes this rounding type of a bottom, and that supports a bias that it's going to continue to go up because there was enough demand that it didn't pull back. And now the cues are gapping up. That's going to help it. And so to consider buying this above this pre-market consolidation, and it's a gap up, it fits my plan.
Yep. All right. Now the market's open. Let's assume this, just these discussion points are for the first 30 minutes. So without reading them, Greg, what put in your own words, what are you physically doing yourself in the first 30 minutes?
Getting coffee.
No,
I'm already ready.
Market open.
I'm
9:30.
not looking at any more scans, that's for sure, because I've already got my list.
Well,
before the market opens, maybe before, 9 o'clock, I could look at the gap scan for sure.
right.
That's something to look for to see what's moving. And then from there, picking out a few that I might add to my interest list from the previous day.
Right.
Putting it in a thumbnail, basically getting set up for, is this event, the market open, going to be in alignment with my expectations? So basically, I'm getting ready to press the button, which
Perfect.
typically I'm, very rare am I going to be willing to press the button on a gap type of a trade within, it's going to be at least 2 minutes. Basically, more so, probably going to be 5 minutes to give it a little time to form a current pattern. But, by the time the market's open, you got to be ready to take action.
Right. And so, Greg and I are running our green room, the live trading room, which is, as Greg already said, it's like our daily internship. Why do we say that? Well, because I'd be doing the identical thing other than running the green room, answering questions. I'd be doing the identical thing if I'm trading my own account at home. So I'm watching and updating the broader markets, watching, setting alarms on my open positions. I kind of just have this term tier one trades. And what I mean by that is, like, they're in the batter's box. They're the ones that I'm ready to push the button the most quickly, as long as they don't do anything stupid at the open. So this is what I'm doing. And then I'm updating, see if there's any economic reports. I know Greg likes looking at these because I'm really busy in the green room, looking for shock patterns, gapping over a red bar, gapping under a green bar. but you're looking for new trades in that sense. All right, so here's an example. Let's assume it was on our list from the night before. We have a beautiful down, so this is our daily chart. All our charts are this simple. Color-coded candlesticks, color-coded volume. We got the 20, 50, and 200. We say they're visual aids. It just helps us, speed up the analysis. So I got a declining 20, the 50 and 200 are rolling over. Greg's course gets into in-depth how to use these to your best advantage to confirm the pattern that we're trading. And so this is on my watch list the night before. It's a sell setup, 3-bar reversal, and we'll also kind of differentiate. Many of these patterns could be just day trading. They could be I'm putting on my swing trade and then just managing, whether you're leaving to go to work or the golf course or not, it doesn't matter. You're just going to put your alert in. So this
So Dan, for
3-bar
clarity,
turn,
because these bars have for clarity,
yeah, I like that.
what I covered up, I think this is what you mean by the setup, not those
Yes,
bars that already went down.
3-bar turn, correct.
Yeah.
Yep, correct. All right, so this is on our watch list. So this is on our watch list. We will short under the low of this bar. And whether it's a day trade or swing trade, that's up to you. If it's a day trade, you want to see what the intraday pattern looks like, of course. So we're going to short under here, stop over the high, manage in between. Now you can see here by the close trade, we bought put options instead of short selling the stock, and we buy options as directional trades when they're liquid because we get the benefit of leverage and limited risk. So whatever the margin would be on shorting a $61 stock, we only paid $1.75 a share, and these puts go up in value as the stock falls. So that's our directional trade.
That link, folks, is where you can read more about the swing letter, and there's an offer in there, 2 months for the price of one. Concentrated / swing profits. What Dan is showing is from the member area, the updated information.
Right. And so let's show them the chart now. We held it 3 days, 71% return on those puts that we bought. So we entered here, held it 3 days, took our money, off to the next trade. So another example. It was another stock on our list to short. We actually did it here, went against us a little bit, but we called it anticipated breakdown after 6 bearish inside days. So this also shows our uniqueness. We don't just say, do this. We give you the technical setup. So this wasn't an official breakdown because it didn't trade under this green bar. So we said, you know what? Anticipated breakdown after 6 bearish inside days. And it finally collapsed, and we held on to this for 16 days, but made 46 points, just managing it as a swing trade. But we still put it on in the morning session. Whether it's a day trade or swing just depends on how you want to manage it. All right, so Greg, why don't you tell them about, I think you invented this concept, 25 years ago. So tell them about reversal periods and,
I didn't invent it. It was an observation that I made others aware of because back at the time when I started this, remember, there was no internet. So you didn't have the access to speak to everyone that you wanted to so readily. And so part of my self-education back at that time was to print out a 5-minute chart of the S&P 500 every night and to mark it up. Mark it up with what? You don't even know what you're doing, Capper. Well, I know that that was a reversal there. Right? So that was part of the learning process, trying to figure things out. And so I just noticed after, many, many, many printouts was like, hey, look at this. 10 o'clock, it changed again. 10:30, it changed again.
Right.
12 o'clock, maybe, we call it doldrums, but sometimes 12 o'clock things started to happen. And then definitely the end of the day, 3 o'clock and 3:30, activity picked up. So there was this consistent time period to pay attention to. So it's something to be aware of because through all of this time, it's been consistent. Now, it isn't every single day that it plays out like that. Sometimes a reversal period can actually be a continuation period. So just like
Mhm.
everything else that we teach in concepts, you have to combine the different concepts. So at 10 o'clock, part of the thought process would be as an intraday trader, have the markets been going sideways for a half hour? Have they been going vertically for a half hour or vertically down for a half hour? Are they on support? Hey, it's 10 o'clock. They may reverse here. Now we might look at something like an internal market gauge, like the tick, and use that in combination with that. So as we put this information together, this is one piece of information that certainly that held the test of time as a useful piece of information.
Yep. What
215, you know what that I didn't at 215 going back, when I noticed this stuff, this was back, in the early 90s. And 215 was like, but now it's very interesting at 215 how things tend to happen almost the minute where trends come together under certain criteria.
and this is just kind of a visual of that a little bit. Pay attention at reversal patterns. So this is a SPY intraday chart. You obviously need to be looking at this. I call them the four horsemen. Greg and I both trade off six screens. So my bottom right, the way I have it set up, I can just easily glance at the four horsemen on three different time frames, along with some other market internals that Greg teaches in his course, obviously. And that's how we keep a pulse on our bias all day long as day traders. And, you can see a bullish reversal. I got a rising 20. Here's an end of day rally. We're going to talk about that momentarily, right? What we're going to do in the power hour. This power hour was bearish. This one happened over lunch, but that was a beautiful new low reversal on this day. I have an igniting gap up. I'm looking for a bullish setup on a controlled retracement. So you see how every one of these arrows gives me a different bias for my day trading.
You know what I would add to that, Dan, to everybody? I mean,
Yeah.
for those that are in the room here, I would imagine most of you focus on what's happening intraday and as well as daily. But one thing about that chart that jumps out at me as an active trader is how different one day can be from the other. So you need some tools that help guide you as to, hey, what, we've all been through this. I'm kind of talking to myself to make the point. It's like, hey, Greg, yesterday was a really bullish day. Be careful with that bias that it has to continue today because it doesn't have to. And even though the next day could be a down day, that doesn't mean it affected the daily time frame in a significant way. But are you going to trade, short? Yesterday was an up day. We can as an intraday trader, but you need a plan for that. But in this chart, on this side of it, you had, what was that stupid thing? Whatever. On this side, that was bullish, it closes up. Now it rolls down, sort of like what happened one day this week. Everything looked like it was going to go up, and by the end of the day, it didn't follow through. So traders get tired and they sell. And we say sometimes things go down because they didn't go up. Right? Traders just get tired of holding on to something, and then it follow through the next day, and now this is an up day. So you need tools to help guide you.
Yep. Well, let's read the title. Bullish gaps, setup, and myth that all gaps get filled. I just thought that was a good chart to show, again, our 20, 50, 200. So look at this gap. Okay, that's a bullish gap. But I write here, it's a bullish gap, but there's no setup. Remember our first slide? I need a setup, multiple time frames, price for it. But 3 days later, it became a bullish setup because then it went sideways at resistance. What about this one? Well, that's an igniting gap. So that I'm more bullish on. And so we'll be talking.
This one, I hear you, Dan. That gapped above a breakdown failure. That was pretty powerful.
Right, but it gapped to resistance. So there's no setup yet.
Right.
Until the green bar.
But it sets the stage for a bias.
Absolutely. Right. So this one, full out bullish buys. This one, same. It's a big gap. This gap's bigger than this one. Just look at it visually. I don't need to look at the dollars. But I got a rising 20, 50, 200, little, little breakdown under support. That's an igniting gap. What about this one? Well, I've rallied a lot. And now you're gapping up. I mentioned to you visual aids with moving averages. At the opening price here, that's far from the 20 MA. That turned out to be a short-term top. Well, that's all. We're just showing you different tools here for what to do at the open, the close, keep your bias objective. All right, so Greg, I'm not giving them your 7-pointer here, but I typed it here. So here's a daily chart that gapped under support. Here's the 15-minute chart. So why don't you take it and explain how this is a salivating, wonderful short setup for gap traders?
Like everything we do, it's about creating a plan based on the concepts that were on that first slide. Right? What is the trend? So I look at the daily chart. Look at the trend. Well, I see the moving averages are pointing down. The shorters are below the longer, the intermediate term. The trend is down. Step one. Where this rolling arch is, right? I see attempts to go up, and it gets knocked back down again. It tried once, it tried again, it tried again, it tried again. Now, I know this might be a little difficult to see, but look at that one that I'm pointing to right there. That was pretty convincing that the next bar or two, it could go up. And it didn't. It gaps down. All right. Well, maybe this is just going to be one of these back and forth, like we've seen in this market. Red, green, or whatever. But we've got a trading range. So again, like everything we do, charts represent what other people are thinking because they place bets with their money and it creates a chart. So now all those that were buying and all those that were selling were creating a battle between supply and demand. Well, supply won. It gaps down. Now I think it's going to go lower. Okay, now that I believe that it's going to go lower, I need a strategy. How am I going to get in? Well, in the gap course, one of the things we look at was what was the structure from the prior day. Now, once it gaps down, and this reminds me, not exactly, I like to say it's the same but different. So I think it was Monday that the markets went up a lot, right? Friday. and then they had gone sideways Friday afternoon, and then they gapped down right out of that consolidation on Monday morning. And so based on that, this is a 15-minute chart, but it was similar to this. And I shorted IWM, actually TNT, the leverage one, under the first 5-minute bars low. That's one of our ways to getting on board. If things line up properly, 5-minute bars low. So this one traded under 15. Okay, fine. It took all day for it to finally pay off at the end of the day. It was all day holding this thing. It didn't give her a reason to get out. But
Right.
this one collapsed. It held there for a while, again collapsed. So different setups. The outcome could be differently, of course, how they move, but you need a way to monitor these things. You need rules to tell you what to do, because we're just too susceptible to emotional type of reactions intraday without
And
rules.
where do we get these rules on trading gaps?
From Master Trader.
That was a lead-in right here, Greg.
Yeah.
It's your AGS. That's advanced gap strategies. So, you know, some people say trading is gambling. I'm like, absolutely not. We have a technical edge proven by our success. 30 years, we have about 85% batting average. But a professional poker player understands the setup, the odds, when to fold, all that proper money management, psychology. And so ours is the same. So Greg's gap trading course, it gives you in these 7 steps. You'll go slow at first, but once you get the seasoning in the green room, you'll see us. We're like, that's a no-brainer. That's a no-brainer. Short of 5-minute low. Buy a 5-minute pullback and reversal on support.
I'll give you a test question, Tat. Not saying we should include some test questions to make it interactive. I totally agree with that. So here's a question unrelated to so much just the patterns, but in what way can trading be like gambling or not? You can think about that for a second, and that's a whole nother discussion, but
Absolutely.
you know,
I have an
you know,
answer.
you can make the argument that it is, and you can make the argument that it isn't. And one of the arguments that it isn't, well, it is if you don't have a trading plan, that's for sure. It's gambling.
Right.
You're reacting in the moment. But one of the differences about gambling and the markets is that, well, it's similar in that you get to choose how much to bet at the beginning. But with if you're playing poker, you don't get to pull out half of your chips. Whereas if you feel uncertain about a position, you can reduce it in half. You might make a little, you might lose a little, you might lose more than a little when you decide, but for whatever reason, you get to reduce your position. And you also get to add to your position, which you don't get to do if you're playing cards or roulette or whatever it might be. So there's a lot of advantages to trading versus playing poker. Right? You can have a stop loss, right? So you don't have to lose your whole bet. Absolutely. Trading is so much better than playing poker or roulette or whatever.
And so we could show you 100 examples, but we don't have the time. But I'll just show you this one as an example of Greg's 7 criteria. Will teach you how to react to this. It's just a different setup, but it's the same analysis. You got to gap up from a consolidation. Check. You're done. You're done, meaning it's quality. Then I just go down to a smaller time frame. One of Greg's 7 criteria is end of day base, which is it's consolidating bullishly into the close. But unfortunately, the market closed at 4 p.m. Eastern. It gapped up. this is a 15-minute chart. So Greg could have very well been buying this, the bottom of the bottoming tail, bullish price action. Do you want to add bullish price action? Look where this thing closed with a wide range igniting bar with 2 bullish inside days. So, just because of time, so here's just a bigger picture of his course here, mastertrader.com/AGS. But, just for time, let's, I want to get to the latter part of the day. So even though the title said we're going to teach you the open and the close, what do you do over lunch, Greg? Well, you know what I do. I because my body like demands exercise, and I enjoy it, and it keeps your mind fresh. I know some people like to sit in the green room all day, but it's actually not healthy, because then it's called the midday doldrums for a reason. Things are slower, more chaotic. So why not go do something more productive, come back? So I do that, then I come back, and what do I do what do I do when I come back from the gym? I'm looking at my computers. Well, guess what? It's a derivative of that earlier slide I told you with the market open. I'm adjusting my bias. I'm looking at my opens. I'm going through every single alarm that went off, resetting them. And then I can, if I want to scan and look for some new setups for the afternoon. That's what I'm doing in the midday doldrums. I just summarized it there in 90 seconds.
I'm here, meaning depends on what happened in the morning. Some mornings not much happens, and the midday period are where the action is. So just like 10 o'clock, 10:30 reversal periods, they're guidelines, they're not absolutes, and neither is the midday doldrums. There are times where the midday is, the place to be. Now, early morning price action tends to dictate that. The reason, if you have a significant move in the morning, odds are you're going to have a dull midday period, and you'll review how that midday period was. Now, sometimes things get so stressed in the morning that they come down a lot or a significant amount if you're a day trader, enough to profit from at that time. So there are opportunities, but generally over a very long period of time, the midday period tends to be less active for obvious reason. People go to lunch.
Exactly. Wall Street takes a break also. In my experience, is usually the doldrums are active if you have an igniting day in the morning. What I mean igniting is igniting up or down. All right, so Greg, why do we call this power hour? And what are all right?
Well,
So
sure. So by the end of the day, and I love after 2 o'clock
okay.
mostly, because the prior day you've gathered information that cannot change, and you bring that into the next day and you see how that begins to evolve at the beginning of the day. But by lunchtime, give or take, before, after, whatever, forget the exactness. Point is, we've gathered enough information by the latter part of the day to either confirm or contradict what happened the prior day. So we're putting together this information that increases. I mean, today's information is real, right? Meaning real time. This is what occurred, and I can put it in the context of what happened yesterday: support, resistance, trend, so on and so forth. So now, what's happening? I'll bring you back to all of this is about what traders think and they believe. So you miss an opportunity in the morning and you see new information, you're ready to act. You're in positions, they held up really well. They set up new things, you're willing to add. But this new information that is evolved now either shakes confidence or increases confidence. And at the latter part of the day, institutions and traders are going to take positions based on that.
Yep. And then, yeah, so then we're gonna show you our late day breakout strategy is just one of the many that are amazing new afternoon trades. So late day breakout. What is it? It's up on the day. It had a bullish morning. We can teach an 8-year-old. I don't have little Johnny's picture today, but it had a bullish morning. And it's consolidating in the upper third all day long. And it breaks out after 3 o'clock. Little Johnny's like, that's it? That's it? They come in different flavors, of course. And you got to lay all those other concepts on the first slide, and you got to find them. So it's not like you can just put it in a computer and have an ATM machine, but the knowledge of the setup, once you see it, it's extremely easy. That's correct, Brett.
What's difficult about it is you having the patience and discipline to either search them out or sit there and wait.
So Brett just said that's a 1, 2, 3 on the daily, and that's 100% correct. And let me explain why. These vertical lines are different days. This is a 15-minute chart, so there's 26 15-minute bars in a 6.5-hour marked New York Stock Exchange day. So this day, it gapped up and had a beautiful run, closing, just eyeball it, in the upper 20% of the day's range. So that's a bullish wide range bar, is what Brett is saying. The next day is still in the upper 20%. So now I have 2 bullish inside days. Now it brings us to the late day breakout. Wow, Greg, you're good at this stuff. And
pretty easy.
And this is where, Greg's strategies course makes this one such a salivating one. So I typed it here, so now let's elaborate on it. And Greg, they wanted more quizzes. Maybe we should have, or you should have, put a block off all this data, because what was everybody's bias after this opening 15-minute bar low? Go ahead, you can tell us honestly. It's obvious. You expected it to come further, retrace lower. No, Brett, after this red bar, I would have expected it to retrace further. Until where, I don't know. And then, look, a full retracement of that bar into the doldrums and going sideways with a breakout at 3 o'clock. That's a no-brainer.
So this bar here, this is a big wide range bar. This is a consolidation. 1, 2, 3, meaning big bar, little bar, and your bias is it's going to go up. So this bar, that big red bar right there, while it was bearish initially, after recognizing it, because my bias is bullish, I'm not doing anything. Meaning, just because that bar forms, and we could even refer to this because it is a 1, 2, 3. It didn't trigger, but I'm not trading that as a bearish 1, 2, 3 because I have a bullish bias. It's going to have to go down. I'm going to have to watch it, and it's going to have to give me a new setup, right? That has shifted my bias to being a bearish one.
So just like just like gap trading, every single one of our patterns, it's just, Greg likes to say they're the same but different. Every bar is not going to set up the same. But you learn to recognize it. So here's our, green trial, our green trading room. We have a no-brainer. Spend an entire week with us for $7, the cost of coffee. 5 trading days. Come spend with us. Same but different. Here's my daily chart. It's a Climo. Why is this one? Here, I put it into a question. So here's my morning sell-off. Discuss the price action for the quality of the setup, entry, and management. Well, I gave you the answer right here. But this was the biggest bounce of the morning. All the way back down to the day's low. Then it's in a coma, can't bounce anymore. Right there, that's right where you short, under this little red bar. Stop over the high of this consolidation. That's a no-brainer late day breakdown. All right, so, same, just different flavor, same, different flavor. This red bar ignored, closing breakout. Just the no-brainers. It's just a different setup. So here's Greg's swing course that we've been referencing for a while. Back to slide 1. He puts it in all these thought-building lessons together that I didn't see that. So can you post them? Greg's going to show you a different link here, but this is the thought-building lesson. All right, see you, Moby, on trading anything that moves. Doesn't matter. So you have the objective information, and then it's just a matter of seasoning after that. Yeah, so now we will take a look at other stocks of interest, answer questions.
You want to bring, I have to find the page, Dan. I thought whatever. So everybody, while I find this page, Dan wants to bring up a chart. Many of you have been waiting based on my promise to deliver a long time ago, an intraday trading course, which is almost done. And if you are interested in it, this is the link. I'm not done with it yet, but I will be done with it sometime next month. It's going to have a large focus on candlesticks. I'm going to have plenty of swing trading opportunities in addition to what the swing course has, and a lot more information and a lot of intraday concepts in there, including intraday market internals, end of day market internals, multiple time frames for intraday trading, and plans to put that all together. You can read about it there on that page. So as you can see, it's half off for early bird special there. An email will be going out for it, but as I been slowly, actually it's been a couple of years with this intraday thing, everybody's interested in candlesticks. And so what you teach, how is it different than others? AQ, well, you can see by this webinar, I don't know where you've been, but different than others. But as far as a candlestick goes, I'm not going to teach you what a dark cloud cover is. That, to me, that's useless information. We're going to talk about a lot of failure patterns, how they apply to multiple time frames. Like one of our slides is call it what you want. It's going to go up. So as we look at these different candle patterns and put them together into groupings of patterns and multiple time frames and support, resistance, trends, and so on. And then how do I apply that to and as an intraday trader with rules. Right? It's very detailed. So how is it different? Well, if you went to a webinar where it was one of my past students, and there's lots of them out there, you might hear similarities. But as far as if you're talking about basic candlestick stuff, it's anything is going to be different because there's no indicators, there's nothing proprietary as far as software that you have to buy, that type of thing. So it's about education, an in-depth course on price analysis and putting it all together with lots of examples. So we got a few minutes. We can look at a few things here, but you will not be disappointed, I assure you, because this is a labor of love. So when you sign up as a member, you don't have to take a course. If you sign up as a member, if you use TC 2000, which we have zero affiliation with, if you use it as a member, we share at no extra cost these different layouts and scans that I've created. This is a gap scan. So as you can see, gappers, if it's gapping, you're going to find it. You can put different criteria, percentage of the gap, the price range that you want, sorted by volume, and you can do that for bullish gaps. There's options in here, so you can look at options. These are for credit spread traders, this blue one, things that are going sideways. Now, if I want to find things that are gapping above the high of a green bar, that's in here. And so I'm looking for one with more volume. But then, let's see here. That didn't gap above the high of a green bar. Neither did that. It's gap below a green bar. I'm sorry, below a green bar. So gapping below the green bar is one piece of information. What we would put together is what's happening on the 65-minute. Did it violate support? And then we'd go to a 5-minute looking for entry points. Is it gapping above the high of a red bar? So here you go. It's the beginning of potentially a move. It's at resistance. It's something that can continue to go up tomorrow. And then regular gappers, which you can find in different software packages, things that are gapping up or down. But yeah, I can keep an eye on what's gapping as far as what's it doing in intraday. Is it staying above the open? So this gapped up. Did it present me an opportunity? No. No. So this one gapped above resistance. And so this one is much better. Why? Because some of the things we spoke about a little bit in this presentation was what was the structure intraday? And we got this sideways consolidation. So because it's gapping up, right, it's not gapping up far away from any support, and it's relatively tight to the moving averages. So this gives us an entry point. You purchase swing trading courses, the content still valid? Of course it's still valid, but there's more in here in this course as for examples. You can't change what works, right? That's been the years. I don't think I didn't cover market internals as in depth in the swing courses as I'm going to do in this course. And of course, this one has plenty of intraday, but this course is half the price because of early. It's coming out now, and so eventually it'll be as much or whatever we're going to be doing with different combinations. But nothing is to say it's invalid, the swing course, because it's anything we produce is timeless. Market environments change, which means you need to know what tool to go grab and apply it at that particular market environment. So things change a lot faster intraday than they do from a swing trading and of course from an intermediate term bias. So we need to continually update, and we do that through monitoring, retracements, support, resistance, swings. Did it take out a swing? And so we didn't even talk about, you know, the ETF course, but even in the swing trading, not course, the letter, it's about transitions, right? Rotation. As prices in this example right here, and it had a power move up and it's grinding its way down. It violates the uptrend. But now this bar completely turns things around. So now I have to utilize that. I have the weekly time frame down here, which is more applicable, of course, to swing trading. But now I see this wide range green bar on the weekly deep into resistance. So we get into retracement concepts. So at that point, if it can consolidate up here, this is going to be a long. Now, that could be for a swing trade, but I could also use that bias for intraday trading. So as I look at 65 and the 5, how do I combine that with my bias from the daily? So gappers give us, that's not a big gap, it's relatively insignificant, but if I want to look for the big gaps, right? This one had news. I think it was earnings today. Yeah, as you can see,
Yep.
earnings. That was the percentage gap. This one was an earnings gap. Now, this is below its opening price, right? It's a red bar. These are great for swing traders because this gapped up on earnings. What we want to look for now is that it doesn't fill the gap in the next week or so. Because look at the bottoming action, look at the breakdown. It's cleared the resistance. So if this can go sideways for a few days and begins to build a new base, right? Was resistance become support. We'd like to see it stay above here and not fill the gap. And this gives us a bias for this. Kohl's, I can see it's a department store, and earnings were today. So now I'm going to put this on my list, and all I need to do that is flag it in this platform. And now it puts it into a little watch folder for me. And so if you are a credit spread trader, this has got gaps. Where's my credit spread thing? That's not it. I got scans inside of scans, folks. Where is it in here? Believe me, it's in here. I just put this in a nice little tidy arrangement, but there's scans in here for credit spreads for what's going sideways as well. So like I said, we share this all with you. If you have questions on the new course or an older course, matter of fact, you can even add the older courses to the checkout there for half off since it's new. But if you have questions, email us, Greg and Dan at Master Trader, and we'll be back soon. Bye-bye.
Thanks.